Investing surplus cash within the business then. So when you invest in surplus cash, and again, you're looking at your cash flow needs within the business, we understand that. Business savings accounts, business current accounts, generally speaking, don't pay very much in terms of interest. Now, we're mindful of what we were saying before about business relief because having too much cash or investments within the business can impact that. But there might be a reason why you need that cash or why you need those investments within the business. Similarly, it might be a holding company or a family investment company where we're looking at the underlying investments and it's genuinely for investing. So, the first thing we're always looking at, obviously, is the pensions and if there's surplus cash, can we get it out of the business in a tax efficient way? Now, what I will say about holding too much cash, whether that's on a personal basis or whether it's within a business, a great analogy that I always think about is that when you're holding on to too much cash, it's like holding on to a snowball. It's melting before your eyes. And that's inflation. Because if you're not at least matching the cost of everything going up, then effectively you're losing money. The value of that money is falling. And that is difficult with cash accounts within businesses. But we do have an online cash management platform that we use. There's a few of these around that you can utilize where there's varying cash accounts available anywhere between currently 3.5 and 4.5, which are business savings accounts. It can be charities, it can be trusts, and it can be businesses. All UK banks and building societies that have better rates than what you've got potentially with a high street bank. What we've had clients do is even put the money that they've been saving for corporation tax into something with a 6-month fixed rate, which is higher than what they're getting in the bank, just to park that money. They know it's there and it'll come out in time to pay the corporation tax bill 9 months after the end of their corporation tax year. With regards to bonds and investment accounts, then, so these are investments within the business. So the business owns the investments. And as John mentioned before, UK shares don't have any tax on the dividends. And this applies as well if you've got investment accounts within the business that are then investing in other companies with UK dividends, you get that same benefit in terms of how they're taxed. So if you've got surplus cash within the business that you don't want to put into a pension, you're not pulling it out, but it's there for a little bit more long term, then you could look at doing either some sort of investment account within the business to get access to shares and bonds and different things in terms of potential for higher rates of return over that longer term. The company owns that, still sits on the balance sheet, it's not moved anywhere, but it's just giving you that extra returns whilst it's sat there for whatever the plan is for that in the future years. And the structure that you take is really important. So there are different taxation. So in corporate investment bonds held within the business, they have a tax paid within them, which is seen to be around the 20% mark. It does vary slightly, and therefore ultimately will offset some of the corporation tax when something is surrendered, but doesn't pay tax on an annual basis. And with an investment account, in theory, that pays tax on an annual basis, just depending on what you do with regards to the investments. So there are investments within a business where you can go, we've got a load of cash here, it's not doing anything, I want it to work for us. But again, it has to come into the conversations about what that's for longer term. But if you're a business sat there with cash that's getting, less than 1% or something with a high street bank, then you can definitely look at better options within there, but just be mindful of some of the other things that we said. John, anything to add?
No, that was pretty well covered.